everybody, how are you? Did you know that according to official statistics, about 75% of all private Forex traders fail and end up giving up? Now, of course, why is that? If we could find out why that is and solve the problem, it could help a lot of people. I'm going to suggest here that there are 3 reasons why people fail and give up. The first of those is just effective strategies, because there's a lot of confusion about strategies in the Forex market out there. The second one is the thing we call greed. It's a very powerful emotion, and it gets in the way of a lot of Forex traders. And the third one is another very powerful emotion called fear, the fear of losing. And we're going to have a look and see how that affects people trading Forex. Okay, so let's start off by talking about strategy. And there are 3 basic strategies that most traders use. And the first of these is what we call fundamentals. In other words, people look at what's going on in an economy and in the world around us and look at events and news events. They listen to the news, they look at announcements that come out on a regular basis from the central banks of different countries. And then they form an opinion about which way price is going to go, up or down, and then they place a trade accordingly. Now, the big question is, how effective is this? Well, I haven't found it effective for myself at all. And I think the reason for that is that the news producers are often not very clear about what they think. They use a lot of terminology like ifs and buts and maybes and perhaps. If this does that, then that will happen maybe. And if it doesn't, then it might go the other way. And very confusing and not at all reassuring. So I haven't found the fundamental method to be at all helpful and reliable. So what about the others? Well, the other one that people use is to use indicators, Forex indicators, and use those on a chart to give some indication of whether price is going to go up or down. Okay, so we've got very complex indicators that people use, things like Fibonacci, MACD, relative strength indicators, Bollinger Bands, some quite exotic ones like Ichimoku. You've got stochastic, you've got ADX, and there's a whole host of them that people use, and they can be quite confusing and, in my opinion, quite unhelpful. Now, let's have a look at a typical standard chart offered by brokers, just to have a look and see what it looks like. Okay, so here we've got an interesting chart. It's a standard chart that comes with the platform that you can download from a broker. And you've got all the sort of indicators down here. You've got a black chart with a whole lot of little boxes on it. And then you've got the actual price line here with the candles going up and down. But to be quite honest with you, I wouldn't know how to trade a thing like that. I would just get confused. A bit like driving home from the pub drunk at night. So yeah, that's a typical example of a chart with a whole lot of indicators on it. But I must say, I don't think I could make something like that work for myself. So let's have a look at another one. Now here's an interesting one. Let's have a look at this one. This is what they call the Fibonacci, showing a so-called uptrend and a so-called downtrend. Now, to be honest, I haven't found these things to be at all helpful and a bit confusing. So I really don't know why people actually use them. Let's have a look at another one. Give me a moment. Okay, now here's another interesting one. This is what they call the Ichimoku. And somehow you're supposed to make sense of this and figure out whether price is going up or down. I've tried using this, and all it does is completely confuse me. So let me show you a blank chart, which is something else. But before I do that, let me show you a list of the indicators that you get with the MT4 or MT5 platform. You'll see just how many of them there actually are. So give me one moment. Okay, so here's a blank chart with none of those funny lines all over it. And well, you can see it's a lot easier to see what's going on. You haven't got all those distractions. But let's have a look at the list of indicators that are available now. So I go to insert at the top left, I go to indicators there, and then I've got a choice of trend. And those are all your trend indicators that you could use. You've got oscillating indicators for when price is moving to the side and not in a trend. And you've got a whole bunch of those as well that you could use if you want to confuse yourself. And then you've got custom, and there's custom made, specially made indicators. So you can see there's hundreds of them. And I don't know, for me, it's just very, very confusing. Okay, so that's a list of indicators and what they look like. Okay, so the third one that people use is called the price action approach, which basically just gets rid of most of the indicators, ignores what the news pundits are telling us, and looks at a blank chart with maybe one or two support and resistance lines on it and some self-made trend lines. Now you can see from here, let's have a look. You can see this is a horizontal support line that I drew in myself, and it's quite easy to see it. You can see that price came down here, went back up, and then it was a support line there. Price came down and bounced off it, went back up, came back down to it, and then went through it. And then it became a resistance line when price went back up to it. First time, went back up to it second time, and then came down sharply. So that's your sort of horizontal support and resistance line that I find very helpful. And then you've got a sloping line here, which I drew from one point to another point, slightly lower down. And you draw those in, and then price comes back to that sloping line again. So I found these to be very helpful. But a basic blank chart with just one or two of my own lines on it. So let's stop sharing that. Okay, so where are we with this whole thing? Why do so many Forex traders lose money, give up, and go and do something else? Well, we've spoken about three things. We've spoken about strategy. And what's the next one? The next one is a very powerful emotion called greed. So how does that work? Well, let's have a look and see how that affects my trading and causes me to lose money. Okay, so how does greed work? Well, I think we all know what greed is, but what you don't realize is just how it affects you when you're trading. Because all of a sudden, if you have any success at all, you'll see how easy it is to make money. And you start thinking to yourself, wow, I can really make a lot of money in this. And it seems so easy because you've had a little bit of success and it worked. And the big challenge is to make it work over a long period of time consistently, and not just have good weeks or a good day and think that you've made it. Well, that's the problem, is people get overly confident. They see all the money that you can make, and you can make an enormous amount of money in this business. So they think about all the things that they want and what they can now do. They start counting their chickens before they're hatched. And unfortunately, the chickens don't hatch because they end up making mistakes. It takes quite a long time to figure out how price action actually works, what actually drives it. And you find you make silly mistakes, and you're too confident. You start trading large amounts in comparison to your trading account. You know, if you've got a $10,000 trading account and you start trading $1,000 a time, you see the dollars in front of your eyes, and you think, wow, I'm going to make myself $10,000 in a day, and boom, you make a mistake, you lose your whole account. It happens time and time again. It can happen very easily if you don't have enough experience, because some funny things happen in the currency markets, and it takes a while to learn about these things. So greed can be a very, very serious enemy of yours. What's the other one? Well, the other one is an equally powerful emotion, and most of the time we don't realize just how easily we are in life motivated by greed, and the other one, fear. So how does fear work in this industry? Okay, so how does fear work in this industry? Well, the fact of the matter is that if you think that price is going to go up, say for instance, Often for a short while it goes down and you start to panic and you see the losses piling up on your account and you get worried. You're not used to something like this happening and you think you're going to lose money. So what you do is you get out of the trade quickly at a loss, and only to find out that a short while later price reversed and went back the way you were hoping, but you're out of the trade at a loss. And if you do this enough times and you get worried and you get cold feet, as they say, and you get out at a loss often enough, it's going to completely wipe out any profits that you occasionally make. So that's one way in which fear erodes your profits and causes you to lose more than you actually make. Another way in which fear affects you is that even if you're winning and price is moving in the direction you thought, and you can see the profits on your account mounting, you get worried. You get worried that suddenly something's going to happen and price is going to reverse and wipe out all your profit. And so you get out before you should, and instead of making a good 2 or 3 to 1 profit against your risk, that's if you put a stop loss in, you get out at a 1 to 1. You risked, let's say you risked $100 and you make $100, but that's not going to help you because you actually need to make 3 to 1 to cover any potential losses you make. So yeah, fear is a very powerful emotion that stops you from making a good deal out of this business. Okay, so those were the 3 things that I said at the beginning were the reasons why many of the private retail traders who do this as a private operation rather than working for a bank, that's why they fail. So we have dysfunctional strategies, and I spoke a little bit about those, and then we have greed, and then we have fear. They're very difficult things to counter. So what's the option? What's the solution then? Well, the solution is to use a demo account until you're absolutely certain that you know what you're doing, you feel confident, you've managed to isolate a strategy that works for you, and that can take some time. And once you feel confident and you've had a lot of experience using a demo account, then fear and greed, you've kind of got over it using a demo account, and they're not as powerful as they normally would be. So that's my solution to the 3-fold problem that you need to solve. To, first of all, practice until you're quite happy with the strategy that you've chosen. And that in itself, when you're confident and you've had a lot of practice, you know what you're doing, then it's much easier to deal with the twin demons of greed and fear, which will affect you at the beginning of your trading. Well, I hope you found this video helpful. If you did, please push the like button and please subscribe so that you can get some more in the series that I'm running now about the answer to certain questions that people are asking about private Forex trading. Well, until we meet again, I wish you all the best. Have a great day and happy trading.